Today we are going to be talking about moving your stop loss to entry level because it's something that everyone is talking about and everyone is going crazy that you should be using trailing stops or you should be moving your stop loss to the entry level right away. Well, I believe you shouldn't, and I'll be going through the reasons why. I'll be giving you mathematical reasoning why you shouldn't use trailing stops as everyone does so, or why you shouldn't use crazy moving stop loss to the entry level once you see so. Today's webinar is delivered to you by A to Z Forex, myself as the person in charge of A to Z Forex Academy, Yagub Rahimov, in association with ADS Securities London team. And if you are asking who I am, my name is Yagub. I've been in markets for more or less 10 years now. It's actually 10th year anniversary this month already. And I'm working right now on a book called Forex Not for Dummies, which I'm sure it's going to be coming alive this upcoming spring. Before we go ahead and start the training, just a very brief disclaimer for your information that trading on leverage carries a high level of risk and you may sustain high level of loss as well. Therefore, you should not invest the money you cannot afford losing, and may you have any doubts in mind, you should consult a third-party financial advisory. And let's go ahead and start the training. Why do you move your stop loss to the entry level, or why do you move your stop loss at all? And my answer for you is because you're scared. You're like a turtle trying to hide inside the shell by securing his profit or his account. When there is a kind of fear involved, when you're scared, you cannot take the right decisions. Therefore, you will always be ending up in making a decision that will harm you eventually, and it will give you a contradiction in your decisions as well. It's as if I give you two buttons, red and blue, and I write on the red one saying that the blue one is correct and the red one is false, and I tell you which one you choose. Obviously, you're gonna go ahead and make unconsciously wrong decision by selecting the red one right away, because your brain sees that the blue button is true. Okay, so if you are seeing it in your mind that way, your brain is gonna be faking out wrong results for you. And why I'm talking about it for you? In general, the most successful trading structures are based on breakouts, which means is that we look for, let's say, resistance levels as an example over here, and we are aiming for the market to break out this resistance level over here, and then we start buying. When such order appears, we buy. So if you, in that case, let's say if our entry level was at this level and we had just our stop loss right below the lowest low of the market, since the market broke out there, what we would have done is that we would have entered into a profit zone right away. Let me just put it over here. So we would have been already in profit in this kind of scenario. Once you are already in profit, which is more or less, well, 30 pips or so, looking at the market or imagining so, we are 30 pips or 50 pips in profit, and we are aiming 80 pips after all as our take profit over here. So if you start moving your stop loss to entry level right after 30 pips of profit, what's going to happen is that it's going to be ending up on the wrong side of the market, and you're going to be ending up your stop loss right away without having the feel of the real market opportunity for yourself. So is this kind of trading correct? Is this kind of trading profitable for you? Well, let's put it into math, and I'll also show you some kind of real life explanation as well. Imagine that we are using a strategy which gives us 50-50 win rate, and we are going to be taking 10 orders with 1 to 1.5 risk reward ratio. I always use myself 1 to 1.5 risk reward ratio. So imagining that we are going to be taking 10 orders with it without moving our stop loss to the entry level. So out of the 5 orders that we will have profit, we will make 7.5% profit. and out of the 5 losing one, we will make 5% loss. It should be 5% negative over here. So in total, we are looking for making a total profit of 2.5% profit if we were to use the right or follow our KPIs in a right direction. Now, let's imagine that we are not going to be following 1 to 1.5 or 50-50 win rate, but we will be trying to cut back on our losses, and we will be basically moving our stop loss to the entry level in 4 of the orders. So what happens is that we become lucky. 2 profit ones and 2 loss making orders, we move our stop loss to the entry level. What will happen for us is that we will make in total 4.5% loss profit and 3% loss, giving us a total of 1.5% profit only. So the previous one was, for your information, 2.5%. If we are looking at it from that perspective, by not moving our stop loss to the entry level, we would have already made 1% extra profit by not touching our stop loss there. Now, I would like to bring your attention to the real platform as well, and I'll show you some other examples on why I think that we shouldn't really move our stop loss to the entry level. Let me open my trading platform. There we go. If we are looking at the market, as an example, I have in front of me the Aussie dollar pair. As I told you, in general, I always use 1 to 1.5 risk reward ratio. My entries and my strategies involve a lot of moving averages and Fibonacci. I will not really use Fibonacci over here, but let's imagine that this is the entry that I'm looking for. The market, we can look and understand that it is bearish because both of our moving averages are showing downwards. The market is making lower low, lower high. So we are in clear bearish market environment, which means that we should consider always making a bearish entry, not go against the trend. So what better opportunity than we find the correction wave and then we look for the continuation. As an example, the level that we have in front of us, we can see that the market actually has made a overall resistance level, which is the level that I'm going to highlight over here. This level within the rectangle is the resistance level, and we are going to be looking for the market to retrace from that one backwards back into the continuation of the bearish trend. So what we do is that we put a breakout sell stop order somewhere right this level, and we would be looking for the market to continue on a bearish side, of course with a stop loss right above the moving averages. So let me delete this rectangle over here, and we can look at the market in a clear structure. So we put a sell stop over here right below the lowest low of the market, and our stop loss is above the highest high or the closest highest high, which is this level, and we are looking for approximately 72 pips of stop loss. With 1 to 1.5 risk reward ratio that I'm using, it makes approximately 100 to 205 pips of take profit, which is this dark green color that I have. So red one is our stop loss, light green is our entry, and dark green is our take profit level. Now I'm gonna add the step by step to my chart to see whether or not this level would have been triggered. Let's see if we would be able to really catch the market. So what happens is that right away, or a few candles afterwards, we catch ourselves already entering in the market with 35, 40 pips, even 46 pips in profit. Well, 46 pips is a great amount of profit actually, but we are basically risking 72 pips. Closing the entry at the 42 pips is actually telling us that we are using a wrong risk reward ratio, since our reward is smaller than our risk. And moving our stop loss, well, for some might sound good, But for me, I don't think that it is the right opportunity, because I'm following my KPIs, and my KPIs are telling me that I should be looking for 102 pips take profit, or accept the 72 pips of loss, which is the levels that I'm ready to accept. And let's see, if I were to move my stop loss to the entry level, I would have already been hit by the market at no profit, no loss, by scrapping my entry. Well, you might say, well, nothing happened. You didn't make a loss, you didn't make a profit. Perfect. Well, it's not perfect, because I already before that took a risk of entering the market. It means I already am making a loss from the risk perspective. Now, imagining that I didn't change my entry to the entry level, or stop loss to the entry level, this is what would have happened afterwards. Let's see. Market continues on up and down, and then we see the continuation of the bearishness, and then we have the entry hitting the take profit level of 110 pips. We are more than happy, or we would have been more than happy. Let's look for other opportunities. Let's see the market. I shouldn't really go too fast. So the market again is moving on a structure that we are looking for the entry level, and this is the greatest entry level that we can have. The market went on bullish side. Moving average is showing down. I'm referring to my 200 moving average. So I'm using again approximately 80 pips of stop loss, and I'm going to be aiming for making more or less 120 pips of take profit. And there you go. This would have been the profit opportunity, 170 pips even. So guys, in short, I'm going to catch it short for all of us. And I want to tell you that moving your stop loss to the entry level without really understanding what is behind is not really the smart idea all the time. And therefore, you should not listen to everyone who has no clue about the market sentiment or market movements. And you shouldn't just move your stop loss without really understanding. And let me, before we finish up the training, also tell you why. When we are aiming for the market to break out on a specific level, as an example, this level that we are looking for, we are buying the breakout. Okay, this means we are gonna be buying until our take profit reaches, which is more or less this level, let's say, and we will be selling from there this level onwards. So if we are buying, our KPI is basically to look for the breakout to buy, and we put our stop loss then right on it, it means that we have contradicted our initial KPI or our initial strategy by ignoring it. So when you move your stop loss to the exact entry level, you already have scrapped all your KPIs for the entry level and moved against yourself by accepting not making any profit. This is it, guys, for now. If you have any questions, please feel free to ask. In the meantime, I have a big announcement. In the coming weeks, I will have Fibonacci training. Only limited number of people will be accepted for this special webinar. It will be 2 series, Fibonacci entries number 1 and Fibonacci exits number 2. So you should follow A to Z Forex closely for more announcements about Fibonacci training. The registration page will be available tomorrow, and the way you will be able to get the access is by inviting 3 more people to the training, and then you will be able to get the access for the Fibonacci training. This is it for today's training. Thank you very much, and it's time for the questions and answers now. There has been many questions, but this is the question that I am looking for. Is there any occasion when moving your stop loss would be perfect or would be worth it? That question comes from Edmundus. Thank you very much for it. Now let's take a look at the market and look for a possible scenario when we would be, or when we should be, moving our stop loss to the entry level. let me open the trading chart once again. So imagining that we have entered the market over here, or imagining that we have entered the market somewhere over here, and this is our stop loss, and we are looking for the market to continue. So once we have entered the market on the right direction, what happens is that the market will move with us. It can move up and down, scare people off, stop hunt some people, some newbies, enabling them to exit the market at their entry point, or even make some loss, and then from there on the market continues. As an example, over here the market continues, we end up making some profit, and it goes up and it goes backwards, and we can see that the market afterwards finds itself another support over here because we are selling, and then it gets broken. Once you see that the market finds itself such a support level and then it gets broken, then you can move your stop loss to the entry level, or even below the entry level, somewhere over here, because you are then ready to understand that the market already found itself a new resistance, because support generally turn into another resistance, correct? So if that happens, this is your overall safe zone. And then once you see that the market already again is pushing upwards, and you see the pair breaking above your previous support and current resistance, that's the level you exit the market. You don't need to wait for your entry to come and touch your stop loss at or below your entry level. We are not here to risk pips. We are not here to gamble with our entries, but we are here to really target the market on the right direction. Okay. Since we have no other questions, I will be finishing up the training over here, and I'll be looking forward to seeing you guys in other upcoming trainings as well. We have amazing plan for 2015, end of 2015 and the beginning of 2016, especially with the events that we have coming up in Amsterdam, in Wall Street, in Los Angeles. We have also some events planned in Singapore, Malaysia, Madrid, Paris as well. So we have amazing plans from education perspective from all parts of the world. I'm looking forward to see you among our other upcoming educational events, and hope to see you among the profitable traders. Thank you very much for being with me today, and stay in profit. Take care for now. Bye-bye.